the live.
Okay.
Bhavna ma'am, please, over to you.
A very good afternoon to all the
मैम
participants.
सेंड लाइव नहीं हुआ है, लाइव नहीं हुआ है, सेंड लाइव।
Actually, send live option is not showing to me.
Ma'am, you are live now. All the participants are live now.
Shall I start?
Yes, ma'am, please.
A very good afternoon to all the participants. I am Bhavna Yadav from Tax Research Department, and here with me is CMA Pragya Negi from the same department. I welcome you to all to our webinar today on the topic Section 16 and 17 of the CGST Act 2017, that is eligibility for taking input tax credit and apportionment of credit. Our guest facilitator for the session is CMA Neeraj Kedia sir, who has generously agreed to share his expertise with us. He is qualified CMA, CS and LLB. He is graduated from Delhi University. Apart from this, he has 14-year plus experience in the field of indirect taxation and also 4-year plus experience in central accounts. He has also served large MNCs. Let us all take advantage of this opportunity to grow and learn together. Over to you, sir.
Yeah. Thanks, Bhavna ma'am. Yeah. Good afternoon, all. Yeah. Good afternoon, all. So today we shall discuss about the input tax credit. So what is input tax credit? What are the conditions and what are the eligibility for taking ITC? So input tax credit is a very small term, but a huge impact. Every small or big registered person want to avail as much of ITC. So however, so government made an act about the eligibility conditions to avail the ITC. So first question arises ki what is ITC? For example, supplier supply the goods. So before supplying the goods, he buy the goods from another registered person. So the amount of tax is paid by the supplier. So he is eligible as per the GST Act to avail the ITC. So today we shall discuss about the sections about the eligibility and conditions for taking ITC. So now start. So first section is about eligibility. So this section says who is eligible to avail the ITC. So who is eligible? Yes, obviously the registered under GST. The person who has obtained registration under GST, he is eligible to take ITC. And second condition is that goods or services which he buy should be used for the business purposes. So these are the majorly the two conditions which is mentioned in the section 16 subsection 1. It becomes eligible to the registered taxpayer to avail the ITC. So if you see in this section, every registered person shall be entitled to take credit or input tax charge on supply of goods, supply services bought to him, which are used or intended to be used. Here the word mentioned intended. So what is the meaning of intended? So let's take with an example. For example, a registered person buy a good from the supplier for the purpose of selling. Yes, he can avail the ITC. And another example is like that. For example, a person buy an AC, okay, and that AC will be used in future. So can he eligible to avail the ITC? Yes, he would be eligible because that AC would be used in the business. So it is the intention of the person is to use the AC in the business in the future. So intended means that if any goods, capital goods, inputs, input services will be used in future, then he is also eligible to claim ITC. So it is the meaning of intended. So this is all about the section 16 subsection 1, which tells about the eligibility. Now we'll move to another section, that is section 16 subsection 2. We shall read with this section with rule 36. So in section we have read ki who are eligible to take ITC. Now government has made certain condition for claiming ITC. So now we discuss the condition, and what are the condition, like the person who is availing the ITC should have possessed tax invoice, debit note. Yes, obviously he should have invoice to claim ITC, otherwise he would not be eligible. So this is the first condition which is mentioned in the section 16 subsection 2, ki possession of a tax invoice, right? Second thing is that the supplier from whom registered person buy a good, he has furnished the GSTR1. So what is the GSTR1? GSTR1 is an outward is a form on which outward supply has been furnished by the supplier. If outward, after that purchase should be visible in the GSTR2B of recipient. After that, if that condition would be met, in that case he is eligible to claim the ITC. So second condition, what is second condition? Second condition is supplier has furnished the return in the form of GSTR1. Okay, so second is first condition is the tax invoice, and second condition is the furnishing the GSTR1, and third condition is he has received the good and services. Yes, obviously. For example, it's a recipient, a supplier has raised the invoice, but he has not dispatched the good. So in that case, the registered person cannot avail the ITC. He must have received the goods or services both to claim the ITC. So this is the most important condition which is mentioned in the section 16 subsection 2. And the fourth one is very important. The detail of ITC in respect of the said supply communicated to the registered person under section 38 has not been restricted. The word here is mentioned that has not been restricted. So what are the scenarios which are covered under this section? Like, for example, the registered person who is claiming ITC has not defaulted in payment of tax. His output tax liability, which he has disclosed in GSTR1, should not exceed with the GSTR3B. Understood? For example, in the GSTR1, the supplier has shown 1,000 rupees, say, but at the time of filing 3B, he has paid the tax only on amount of rupees 900. So in that case, the tax liability of that supplier is exceed in GSTR1 in comparison to GSTR2B. So that condition should not be there. Okay, otherwise ITC would not be available. So it is the meaning of that case. So next one is the tax charge has been actually paid to the government either in cash through utilization of ITC admissible. Yes, this is very much common. It is very much common point. Whatever tax he has been charged, he has to be paid to the government. Okay, and the recipient has furnished the return under section 39. It means recipient has also furnished the return of GSTR 3B. Okay, so these are the conditions. 5-6 condition mentioned in the section 16 subsection 2. These conditions should be fulfilled before claiming the ITC. Otherwise, concerned authority has a power to disallow the ITC. So these are the conditions which is mentioned in the section 16 subsection 2. So before starting this section, I have tell ki we have read this section with the rule 36. So we have it means we try to understand this section. We read the section under this rule 36. So under this rule 36, certain same condition is mentioned here. Ki, for example, like I told you ki he should have registered recipient should have possession of tax invoice. So what are the eligible documents? The list of the document is mentioned in the rule 36, like supplier invoice, ISD invoice, RCM invoice, self invoicing, bill of entry at the time of import of goods, and the debit note. For example, if he has missing something details in the supply invoice, so he can also raise a debit note. So second condition is that what are the things should be mentioned on the invoice. So yes, description of goods or services, total value of supply of goods or services, GSTN of supplier and recipient, place of supply, and the amount of tax. So these are the things should be mentioned on the tax invoice as per Rule 36 to claim the ITC. And third one is no ITC in respect of any tax paid in pursuance of demand order, right? So third condition which is mentioned in the Rule 36, for example, if authority has raised a demand on the registered person, so in that case, if any demand has been paid by the registered person, so he cannot claim the ITC on such demand. Okay, so this is the third conditions which is mentioned in the Rule 36. Now, condition number 4. No ITC shall be availed by a registered person in respect of invoice, debit note, the detail of which are required to be furnished under section 37(1) unless. The detail of yes, the same things is mentioned here, that supplier has to furnish the GSTR1. After that, the same is reflected in the GSTR2B of the recipient. So these are the 4 conditions which is mentioned in the Rule 36. What are the documentary requirement and condition to claim ITC? And it is important to note that these are the condition which is specifically mentioned in the section. Any contravention of this act, concerned authority has the power to disallow the ITC. So every GST consultant and the person who are serving the company should must rigorously check these conditions whether at the time of availing the ITC. Okay. So yes, there is a proviso to section 16 subsection 2. What are the proviso? Yes, proviso means exceptions. So there are some exceptions which have been given by the government. For example, if a recipient has received the goods in lots and installment, then he is eligible to take ITC upon the receipt of the last lot installment. It is very understood and it is very common thing. And second, for example, that every condition has been fulfilled, whatever the condition mentioned in section 16 subsection 2. But what recipient did, recipient has not made the payment to the supplier within 180 days. In that case, for example, supplier has supplied the goods in the month of April. Okay, and recipient received the goods, received the invoices. Okay, supplier furnished the GSTR1. Everything, every condition which is mentioned in the 16 subsection 2, everything has been fulfilled. But recipient has not made the payment within 180 days. Like he has not made the payment at in the month of September also. So in that case, recipient shall reverse ITC along with the interest which is mentioned under section 50. That would be 18% of that amount. So this is the second proviso. If all the condition has been fulfilled, he cannot claim the ITC until unless he has made the payment within 180 days from the date of invoice. And further, he can avail such ITC. Yes, he can avail such ITC provided the payment has to be made by the recipient. So these are the conditions which is mentioned in the section 16 subsection 2. So let's go ahead. Yes. So further, we shall also discuss the Rule 37, which I give an example also. What is Rule 37? So this is very important rule. Reversal of input tax credit in case of non-payment of consideration. We have seen in many companies, we have purchased the good, but we have not made the payment in time. The government has made a plan कि no one can default. So it means supplier has been on safer side. Yes, if the recipient will not made the payment, then he will not avail the ITC. So this is a very important rule. So what this rule say, कि registered person shall make the payment. Yes, the registered person means recipient shall make the payment to supplier within 180 days. So it is also the same thing I'm telling here, कि in 180 days, so registered person shall make the payment Or obviously in case of non-payment, he has to reverse the ITC along with the interest at the rate 18%. And after, when he made the payment, then he can reclaim the ITC. So these are the things which is mentioned in the rule 37. So again I am repeating. For example, if a registered person has not made the payment within 180 days, then he has to reverse the ITC which is availed along with the interest. He has to pay the interest and interest will be levied at the time from the date of the ITC availed and from the date of payment. Okay, from the date of ITC availed till the payment made. So interest will be computed at the rate of 18%. And second thing is that at the time of payment, he can reavail the ITC. So we have seen in many companies we can avail the ITC without checking this system. So we have to make in practice, in day-to-day practice, we have further check whether we have made the payment to the buyer or not within 180 days. And in the assessment year, we have seen many authorities, they have checked these conditions rigorously. Or many of the registered person have failed to make payment to supplier within 180 days and claim the ITC. So we have to check these conditions very carefully. So in this, the condition of payment of tax within 180 days is not applicable. There are three cases in which this 180 days is not applicable. When tax payable on RCM basis, so this condition is not applicable. If we supply the good as per the schedule 1, and schedule 1 say the supply without consideration, in that case it is not applicable. And further, any obligation of supplier met by the recipient, this term is defined in section 15 subsection 2 of the value of supply. So in detail, I think we shall discuss about what are the obligation. Like for example, a registered person buy diamond jewelry. So in that case, he appoints someone to check about the fine diamond. So it is deemed as it is the obligation of the supplier, which has been done by the recipient. So in these three cases, so 180 days, this rule is not applicable. So this is very important rule. We have to be, carefully take care of this rule before availing the ITC. Okay. So next rule 37A. So what is 37A? So what is 37? 37 we have to take about non-payment of non-payment to supplier. Now what is and it is 37 is very common, a little bit confusion we have seen among many CMAs, CAs. So it is clearly defined. The rule 37 is pertaining to non-payment of consideration and 37 is a non-payment of tax. For example, supplier furnished the GSTR1 return. Okay, when he furnished the GSTR1, the said ITC would be reflected in the GSTR2B, and recipient has availed the ITC on the basis of the GSTR1. Okay, but supplier has not paid the tax in the GSTR3B. Okay, till 30th September next financial year. So in that case, the registered person need to reverse the tax which he has availed on or before 30th November, following the end of such financial year. Understood? For example, let's take with an example. For example, a supplier supplied the goods in the month of June 2024. Okay, and he has filed the GSTR1 on the 11th of July 2024. When he filed the GSTR1 on 11th, so after 13th day, the same has been reflected in the GSTR2B of recipient. So on the basis of GSTR2B, the recipient has availed the ITC, but the supplier has not paid the tax of that invoice at the time of filing the GSTR3B. So time elapsed till 30 September of 2025. Yani it means before the filing of August of 25, he has not made the payment of the tax invoice which have been issued to the recipient. So in that case, registered person should reverse the ITC on or before 30th November. It means before filing the GSTR 3B of October 25. So this is the thing which is mentioned in the rule 37A. So let's go ahead. Now this is most important section. So you know section 16 subsection 1 says about the eligibility, who is eligible to take ITC. We have seen the person who has obtained registration under GST and he has purchased the good for the business purposes. So these are the mainly two conditions which becomes eligible to the registered person to take an ITC. So in 16 subsection 2, the conditions mentioned to avail the ITC. What are the conditions? The 5-6 condition mentioned in the section 16 subsection 2 to avail the ITC. So that has to be fulfilled. What is the section 16 subsection 3? It is a very good section and it is very relevant for the companies. You know, many has been defaulted in this section and it is very small section but has a huge impact. See what this section says. No ITC of GST paid if depreciation claimed under IT Act. What is the meaning? Yes. For example, so let's say an example. A registered person buy and capital goods, buy and plant and machinery amounting of rupees 1000 on which GST 18% would be applicable. So how much? For example, 1000, 180 of rupees GST, so total invoice value is 1180. So what would be the accounting entry? He will book this plant and machinery as an capital asset in the books of account. There are two options, whether he book an asset from amount of rupees 1000, okay, and second thing, he can posted an entry in the books from the amounting to rupees 1180 inclusive GST. In the first scenario, for example, if he book the capital asset amounting to rupees 1000, then he can claim the ITC on such capital goods. Okay, if he book the asset of inclusive of GST, then he is not eligible to take ITC. It is a very simple concept. When you book the capital asset, then a depreciation would be charged on the basis of the useful life of an asset, and it will be deducted from profit and loss account. On the basis of depreciation, it will be debited from the profit and loss account, and accordingly your tax would be lesser because you have charged depreciation. For example, if you have taken the benefit in income tax set of that GST amount, so you cannot avail the ITC. You cannot avail the ITC of such capital goods because government say you cannot avail the benefit of ITC at both place, no, at both act, not I. Okay, so for example, so in that case, for example, if you book an capital asset excluding GST, then you can avail the ITC. If you book a capital goods including GST value, then you cannot claim the ITC. It is a very simple concept, and we should take care of this concept very carefully. Simple is that you cannot take the benefit of GST under both the GST Act and IT Act. So this is the section 16 subsection 3. It is clearly mentioned that if registered person has claimed depreciation on tax component of capital goods and plant and machinery under Income Tax Act, then ITC on the said tax component shall not be allowed. So this is the most important section, so which we need to be take care. So now another section 16 subsection 4. So in 16 section 4, here it is prescribed the time limit to claim ITC. For example, a recipient received the goods in the month of August. At what time he can claim the ITC? That is a valid question. He can claim the ITC in the month of April 2026. After 2 years, 3 years, he can claim the ITC. So let's about this. Yes, there is a restrictions. There is a time limit to claim ITC relating to invoice or debit note. What is the time limit? He can claim the ITC 30th day of November of next financial year. Means if someone can buy the goods in the month of December, so he can claim the IC till 30th day of November of next financial year, or the date of filing of annual return. So annual return which we are filing after the end of year, whichever is earlier. Before that, he can claim the ITC. After that, the ITC would be lapse. So understood. So section 16 subsection 1 says about the eligibility. 16 subsection 2 tells about the conditions. 16.3 about the capital asset, which is most important also. Ki, depreciation on tax component of capital goods, and under income tax the ITC on said tax component shall not be allowed, which is very most important. Fourth one is 16 subsection 4. This is about the time limit. What is the maximum time limit? It is clearly mentioned in the act, in the section, that 30th day of November of next financial year. After that, ITC would be lapsed. You cannot take the ITC. So now the question arises. Now I will take an example. For example, any recipient has taken the services from the unregistered person. Okay. And he has not paid, in the RCM case, we have paid the RCM liability, and a recipient has paid the RCM liability, and he has also billed the ITC on the same month. So please listen carefully this example. A recipient has received the services from unregistered person, and he has not made the recipient has received the services from unregistered person. It means it's an RCM. Okay. And while filing the form GSTR 3B, recipient has not paid the RCM liability. Okay, he has taken some senior legal services or some, okay, the services which is fall under RCM, he has taken from the unregistered person. So 2 years, 3 years has been lapsed, and assessment year come, concerned authority visited the recipient of his premises, and from the books of account, he observed, he found that yes, there is a services which is in RCM, but the recipient has not paid the tax of RCM, and also not availed the ITC. If we see from the government point of view, it is a neutral. One time we have paid the payment of RCM, and same time we are availing the ITC. So this would be the neutral for the government. So in that case, what concerned authority did? So he issued a notice. You have not made the payment of RCM. You need to pay the liability of RCM along with interest. Recipient agreed, I think. Okay. So shall recipient is eligible now in in the year 2026. Now he is eligible to take ITC on such RCM which he has paid, which is belong to the financial year 24-25, because maximum time limit is prescribed. What is the maximum time limit? You can avail the ITC 30th day of the next financial year. For example, if someone has received the services under RCM in 2024, he has availed the ITC before the 30th day of November of next financial year. It means before 30th day of November 2025. But in year 26, he got to know he forget to pay the liability of RCM. The concerned authority issue the notice. You have paid the RCM liability, but he is agree, he will pay the liability, no doubt, but he is eligible to claim the ITC, otherwise it would be the cost for the registered person. So for that, a clarification has been issued by CBIC. What are the clarification? So it is very important clarification which has been issued by the CBIC. Now we shall discuss. So in that case, the relevant financial year for calculating the time limit of fulfillment, which is mentioned in section 16 subsection 4, will be the financial year in which the invoice has been issued by the recipient. So this is the big relief which has been given by the government to those who has taken the services from unregistered suppliers. It means, for example, I'm taking an example, another one. For example, is a recipient has received the service from unregistered supplier in the month of August 2024, okay, but he has not paid the RCM liability, and in the year 2006 he got to know he has failed to pay the RCM liability. So in that case, the relevant financial year would be the November 2027. So this is the biggest relief which has been given by the government to the registered person. Otherwise, what would happen? Then ITC would be lapsed. So see, what is the clarification? It is clarification on time limit under section 16 subsection 4 of the CGST Act 2017 in respect of RCM supplies received from unregistered person. In case of supplies received from unregistered supplier, where tax has to be paid by the recipient under RCM, and where invoice is to be issued by the recipient only, in the case of RCM, there will be a self invoicing. That's the most important thing which I am reading now. The relevant financial year for calculation of time limit for availment of ITC under section 16 subsection 4 will be the financial year in which the invoice has been issued by the recipient. Okay, so this is the relief which has been, it means the time availment is will be the next financial year, will be that financial year in which the invoice has been issued. But if recipient issues invoice after the time of supply, so then he is required to pay interest. So yes, he is required to pay interest on delay payment of tax plus penalty on delayed issue of invoice. Yes, what is the time of supply? Time of supply means liability to pay tax. So as per section 13 of time of supply of services, which say what is the time of supply, whichever is earlier means date of receipt of services and 60 days from the invoice date. So in that case, there is a delayed issue of invoice, so we need to pay the penalty. Yes, penalty and interest should be there, no doubt, because you have not made the RCM, you have not made the payment of RCM on time. But yes, you can avail the ITC. So there is an exception of section 16 subsection 4, and this is the biggest relief to the taxpayer. Okay, so this is the clarification which has been issued by the government. So this is all about the section 16, which tells about the eligibility and the condition of availing ITC. So we before filing the 3B, we need to take care of this section, and it is very important section because every business is revolving around ITC. How much ITC he can avail. Okay, so I tried to brief the language of act here so that everyone, a layman, can easily understand. So it is mostly things I have printed here. So this is the things which is mentioned in the sections. So this is all about the section 16. So section 16(1) we have read, 2 we have read, 3 we have read, 4 we have read, and this is the clarification. Now we move here. Apportionment of credit. Yes. Earlier we discussed about the eligibility of ITC. Who is eligible to take an ITC? What are the conditions? What are the conditions for capital goods? What are the time limit? So now, how the apportionment of credit? How the credit will be available? For example, if a registered supplier has supplied the goods to the registered person, but he has used such good for personal purposes, can he avail the ITC? Can he avail the ITC? Because he has used the good for the, no, he cannot avail the ITC. And another example, say for example, he buy 2 or 3 goods. One good is used for personal purposes, and second and third good is used for business purposes. So of what amount of ITC he would be eligible? Yes, ITC he can claim only for that good which can be used for the business's purposes. So now now we read this section 17 of Central Goods and Service Tax Act. What are the apportionment of credit? Now let's see what are the things which is mentioned here. So now we'll go ahead. Section 17 subsection 1. So section 17 subsection 1 is pertaining to goods and services used for business as well as non-business purposes. Yes, it is a very simple thing that, for example, whether goods and service or both are used by the registered person partly for the purpose of any business and partly for other purposes. So in that case, ITC shall be available only on those goods which are used for the business purposes, not for the other purposes. It is clearly mentioned in this good exclusively for the business. The goods which you have buy should exclusively use for the business purposes. Otherwise, ITC would not be available. So this is the section 17 subsection 1, which tells about the goods and services used for business as well as non-business purposes. Now section 17 subsection 2, yes, which tells about the goods or services for taxable as well exempted supply. Yes, so before going through this section, there are two terms here: taxable as well exempted supply. In GST there are rates 0%, 3%, 5%, 12%, 18%, 28%. So those goods on which GST would be applicable is called taxable supply. In layman, I'm just saying. Plus, in that taxable supply, and zero rated supply. So what is zero rated supply? Zero rated supply means on that supply where the tax rate is 0%. So in that, for example, if a registered person exports some good, so in that case there is no GST applicable on that supply. Government has made some scheme on that. If you are doing export, then you are not required to pay GST. So this is called zero rated supply. So taxable supply, what is taxable supply? Taxable supply is that supply on which GST would be applicable, rate would be applicable. And what is exempted supply? Exempted supply, it is mentioned in section 2 subsection 47, which includes the which is exempt and nil rated supply. Okay, so these are the supplies on which GST is not applicable, are covered under the ambit of exempt supply. So this is the most important terms, taxable as well exempted supply. On the basis of that, it is very relevant terms. On the basis of that, we will able to compute the common credit which is prescribed in rule 42 and 43, which we'll discuss ahead also. So what are the section 17 subsection 1? Section 17 subsection 1 tells about the goods and services used for business and non-business purposes. It is clearly stipulated in these sections कि ITC shall be restricted only for the business purposes. Similarly, in the section 17 subsection 2, if goods and services used for taxable and exempt supply, so ITC shall be restricted to the input tax as is attributable to the taxable supply. For example, let's say an example. For example, a recipient has purchased the good on which he has paid the GST at the rate 5%. Okay, and he is selling the goods. He is selling the goods further. There are two types he is selling the goods. He has made two supply: taxable supply and exempt supply. So he is eligible to take full ITC of what he buy? No. So ITC shall be restricted to the input tax as it is attributable to the taxable supply. Okay, so which we read ahead ki how much ITC shall be restricted. This is a very important things which we are discussing now. So ITC should be restricted to the taxable supply. So a registered person cannot avail the ITC. Okay, cannot avail the ITC after making the exempt supply. It is clearly mentioned in the section 17 subsection 2. So it is the most important thing which we have to note there. The ITC shall be restricted to the input tax as it is attributable to the taxable supplies, including zero rated supply. Okay. So now another section 17 subsection 3. What is the value of exempted supply? Okay, for the purpose of apportionment, we need to there is a rule okay, how we can apportionment of the ITC. We will discuss ahead, which is very important. So before this rule, we need to know okay, how we'll calculate the exempted supply. So I told in section 17 subsection 2 कि ITC shall be restricted to the taxable supply. Okay, so we know ki what is taxable supply. So how section 17 subsection 3 say ki what is the value of exempted supply when you will compute the apportionment of credit. Okay, so in that case it is very simple. In the section 15 of the CGST Act, that is pertaining to the value. Okay, and it is clearly mentioned ki how the value would be computed. So similarly for nil rated supply, so we have computed the value as per section 15. Actually, I put this in table for wholly exempt supply. Similarly, the values will be computed as per section 15 for non-taxable supply and the supplier on which recipient is liable to pay tax on RCM. In the four cases, the value should be computed. Value shall be computed as per the section 15. In the section 15, it is clearly defined ki, how to compute the value. So I will not go through this section, otherwise it will be very lengthy. So just we need to know ki, the exempted supply value should be ascertained as per section 15. Now, third, transaction in security. It is also mentioned the value should be 1% on the sale value of such security. How to compute the value of supply of land, supply that will sale completed building and flat, and the value adopted for paying stamp duty. What is the value of supply of goods? 20% before clearance of home consumption. The value of supply of goods from duty-free shop at arrival terminal in international airport to the incoming passenger. Okay, so this is the I have just mentioned ki how the value would be computed of the exempted supply. So in what? So now we recall the section. So what is the section 17 subsection 1? Section 17 subsection 1 says goods and services for business and non-business purposes. It is clearly mentioned that ITC shall be available only on those goods which is used exclusively for the business purposes. Section 17 subsection 2 says about the taxable supply and the exempt supply. To ITC shall be restricted only as input is attributable to the taxable supply. Okay, so in section 17 subsection 3, what section 17 subsection 3 says? Okay, how the value of exempt supplies would be computed. And to compute the value of any product, it is clearly mentioned in the section 15. So we will not go in the section 15. So the value which is derived of exempted supply will be based upon the section 15. Okay, so next section is 17 subsection 4. So this is basically applicable to the banking company and the financial institution, including NBFC. A banking company engage in supplying services by way of accepting deposits, extending loans or advances. So they have option ki either they have adopt the section 17 subsection 2, that is apportionment of credit. It means for taxable ITC apportion on the basis of ITC attributable to the taxable supply. So this is the first condition, first option they can avail. This section is basically applicable to the banking company and financial institution. So please be clear. There is an option which has been given to the banking company, and further he can avail 100% credit of input and input services. Third option 15, these companies, this institution, NBFCs can avail 50% of eligible ITC of inputs and capital goods and input services, and the balance 50% need to be reversed in form GSTR 3B. What is why balance? If you see the GSTR 3B, the table 4 has been auto-populated. Whatever the tax, whatever the GST input has been mentioned to be, it is auto-populated in the GSTR 3B. So that's why it is mentioned 50% of eligible ITC, you have an option. This is the condition which is mentioned in the section कि 50% of eligible ITC of input CG, capital goods and input services you can avail. And fourth one, they have also an option कि they shall not avail credit of input and input services used for non-business purposes and block credit. So we shall discuss the block credit earlier. So these are the four options which has been given to the banking company as per section 17 subsection 4. And further there is a condition, once the option once exercised, they cannot be withdrawn during the remaining part of the financial year. So for banking company, those who are in banking sector and financial institution, they have to clearly identify which are the option is most feasible for the company. Okay, and they have adopted one option out of 4 which has been mentioned here. So the section is, we have read this section 17. It's a very small section. Section 17, 1, 2, 3, 4. Nothing, nothing much has been mentioned in this section. But the role of this section is very, very, much important. They have impact the businesses. Now we shall, study the, read the rule 42, manner of distribution of common credit of input. This is pertaining to section 17.1 and 17.2. So this is the most important, topic of today's session, rule 42. Many of the, GST consultant, practitioner, many of the person who are in the service of indirect taxation has been confused about the rule 42 and 43. Because if a business has supply both taxable supply and exempt supply, then he needs to follow this rule 42. He need to compute the ITC on the basis of rule 42, and it is it is very simple, but many of them, we have seen many of them confused in this rule 42 how to compute the common credit, how to compute the value of exempt supply, what we have taken. So I have uh, how to apportion the ITC. So I have made this in table, and it is very clear. If you read this table, and you will understand each and everything. So this is the main things which we are now going to study. So how to apportion the credit. So let's say, for example, a business who has supplied taxable supplies and exempt supply. Okay. So how much ITC he can avail? How the ITC would be apportioned? How much ITC is apportioned to the taxable supply and how much ITC is apportioned to the exempt supply. So there is a procedure which is mentioned in the rule 42. How we can apportion the credit ITC. Yes, we know what is the eligible condition, what is the eligibility conditions, what are the how to apportion, what are the manner of apportion, how to apportion the credit. It is mentioned in rule 42. So that rule is very, very much important. So the four things which I want to discuss now. Business purpose. Yes, we know if the ITC is exclusively for business purpose, the ITC would be available. If input and input services, so rule 42 is about input and input services, not on capital goods. Okay, so we will discuss now the input and input services. If input and input services used for exclusively means wholly used for non-business purposes, then ITC will not be allowed, because yeah, it is clearly mentioned in the section 16.1 good have been used for business purposes. If input and input services used for non-business purposes, then there is no ITC. Okay, I've told earlier, if we have used the input and input services, but what is the meaning of input and input services? A registered person buys an input. Input means goods, and service means service from service render, service provider. Okay, so and they have been used further for exempt supply. In that case also ITC would not be available. Okay, further there is a section 17 or section 5 which we are not discussing here because it is block credit about. Today we'll discuss only about the apportionment of credit. There is a things which is mentioned here in the section 17 subsection 5 on which ITC would not be available. So they are the three parts. Okay, total tax. So four things would be there: non-business purpose, exempt supplies, business purpose. Okay, so now we read the table. Total tax involved on input and input services in a taxpayer we denoted as a T. if your input tax services is used exclusively for non-business purposes, so that would be not be allowed. Third one, C1, if input and input services used for exclusive for exempt supply, that we denoted as T2. Obviously, that would not be available. Section 17 subsection 5 credit would not be available. Okay, so how much ITC credit uh, which shall claim by the registered person, that one is C1. So out of total credit, if we subtract the non-business credit, exempt supplies credit and block credit, so we get the total credit. But out of total credit, you know, we know there is an input and input services which is exclusively used for taxable supplies. So if any input and input services which has been you know which has been used by the registered person for making taxable supply in the course or furtherance of business, in that case he can avail the full ITC of such input and input services. So that we denoted as T4. Now the question arises, total ITC is C1, out of which ITC pertaining to taxable supply is T4. So there is a common credit C2, C1 minus T4. So now the question arises whether this common credit, a registered person is eligible to take ITC or not. All the game is going on this common credit. All the rule is revolving around this common credit. So how that credit is apportioned between taxable supply and exempt supply. We know the next H point. If we see, we know the aggregate value of exempt supply. We know how to compute the value of exempt supply. Yes, on the basis of section 15. And we also know the total turnover. Total turnover will be denoted by SF. So by this we can compute how much common credit attributable to exempt supplies. So so there is a formula which is been given in the rule 42. If we divide the exempt supply, value of exempt supply, that value of exempt supplies excluding taxes, divide by total turnover, multiply by common credit, then there is a value which will be a common credit attributable to the exempt supply. Okay, so next one, common credit attributable to non-business purpose. It is mentioned in this rule they are assuming there is a 5% of common credit which shall be used for non-business purposes. So it is assumed here 5% of common credit, our common credit will be C2. So 5% of C2 is D2. So net eligible common credit, if we minus D1 which is attributable to exempt supply and D2 which is attributable to non-business purposes, if we have been deducted this D1 and D2 from C2, then we reach at the net eligible common credit which is attributable to the taxable supply. So total credit which is eligible by the registered person is exclusive plus common credit, that is T4 plus C3G. Yeah, it becomes very complicated. Yeah, everyone is getting confused what are saying. Yes, it is very complicated now. So let's take an example. We can try to understand with an example. So before that, there is a uh, note which is mentioned in the rule 42. For example, if the registered person does not have any turnover, then we can consider the last tax period turnover. Okay, aggregate value of exempt supply and total turnover is excluding tax. The fourth point is very much important. This rule 42 is applicable to only on those registered payer who are making taxable supply as well as exempt supply. So the registered person is expected to make such computation of each tax period and for the whole year as well. See how much complicated is that. How we can compute the net eligible common credit? A registered taxpayer needs to compute the net eligible common credit on the monthly basis. Okay, right? Plus at the end of the year he also doing the same exercise. Okay, if there is any deviation, then he need to adjust. Okay, so this is the very much important. Again, I am saying if a recipient has made both taxable and exempt supply, he need to compute the common credit, and common credit attributable to the exempt supply, ठीक है, and attribute to the non business purposes. It is specifically mentioned in this rule. There would be a 5%. We need to compute the net eligible common credit, okay, and the other credit we need to be reversed. What we need to be reversed, that is attributable to exempt supply, and that is common credit attributable to non business purposes. So it is the most important rule 42, and it is applicable to in the in most scenario, it is applicable in every companies, okay, who is involving taxable supply and exempt supply. Okay, so this is rule 42, which tells about the manner of distribution of common credit of input and input services. Now let's take an example of this, otherwise it would be very complicated. Yes, so example, uh, there is ITC on input and input services about that. So there is exclusive taxable ITC. Yes, exclusive taxable ITC है. Yes, registered person can avail the ITC, that is 20,000 rupees. Exclusively exempt ITC, exempt ITC, if input and input tax services, if input and input services used exclusively for exempt supply, then ITC would not be applicable on that amount, 10,000. Okay, common credit 30,000. Okay, ineligible credit 5,000 है, नॉन बिजनेस क्रेडिट 8,000 है, टोटल TC 73,000 है, exempt turnover 4 lakhs है, taxable turnover 6 lakhs है. So now the question is, what is the ITC available as per rule 42? Can the registered person is eligible to take the ITC of 73,000 rupees? Yeah, only he can avail the ITC 20,000 rupees, plus he can avail the ITC of 20,000 plus common credit 50,000 rupees. We know कि ineligible credit as per section 17 subsection 5 not applicable, non business credit not applicable, exclusively exempt ITC कि we have registered person buy goods, buy some raw material which we know that has been used exclusively for the exempt supply. Okay, so in that case he cannot avail the ITC, because in that case he cannot avail the ITC. Okay, because he has no charge further ITC from the customer, so he cannot avail the ITC on that amount. So what is the ITC? So let's see. How much common credit is 30,000? Yes, 30,000 is common credit. It is clearly mentioned in the common credit 30,000 less. What is the less? Input and input services toward exempt supply. 30,000 common credit है, exempt supply 4 lakhs है, और total turnover 4 lakh plus 6 lakh 10 lakhs है. So how much common credit attributable to exempt supply is 12,000. So that 12,000 we cannot avail the ITC. Okay, so second one, what are the common credit attributable to the non-business, which is 5% of common credit. So what is the 5% of common credit is 1,500. Okay, so from common credit 30,000 we need to reverse 12,000 less 1,500 plus ITC plus input and input services used exclusively for taxable ITC 20,000. So ITC as per rule 42 would be 36,500. So out of the ITC, which is total ICT 73,000, we can avail only 36,500. Okay, I think this is clear to all of you. So this is the example which we are taken. It's a very simple example ki how we can compute the ITC. It is clearly mentioned here. We need to compute the common credit. There is a formula common credit. We know. If we don't know, there is a formula. If we deduct the out of total supply, we can deduct non-business exempt supply from total ITC, then there will be a common credit. How much we need to less common credit attributable to the exempt supply, we need to be less from the common credit and it is specifically mentioned ki we need to also less the 5% which is to our non-businesses, and after that we will add back taxable ITC which is exclusively used input and input services. So in that case ITC as per rule 42 is 36,500. So I think so this is the example of rule 42. So okay, so what rule 42 says about? Rule 42 is about manner of distribution of common credit of input and input services. Okay, how to distribute the common credit, how to apportion the common credit between taxable supply and exempt supplies. Government is particularly about this, and there is when the assessment comes up now, every concerned authority has to check this computation. Every concerned authority has to check this computation. So we need to knowledge about this rule 42. Okay, how to compute the common credit, how to compute the common credit attributable to exempt service, how to, and it is clearly mentioned here ki how common credit attributable to non-business purpose is 5% of common credit. What are the aggregated value of exempt supply? Exempt supply and total turnover should be exclusive taxes. So all the condition is clearly mentioned in the rule 42, and this is all about the input and input services used for business and business purposes and exempt supply purposes. Okay, so this is all about input and input services. So now another rule. This is also a very important rule. This is very important rule. So rule 42 is about the input and input services, and rule 43 says about the manner of distribution of common ITC of capital goods. Okay, how to apportion the capital goods used for exempt supplies. Okay, so you already know कि जो ITC on capital goods which is used exclusively for non-business and exempt, exclusively means wholly, totally, that is used for non-business purposes, ITC will not be allowed. We all know that. Similarly, if the ITC on capital good, if it has been used exclusively for exempt supply, that in that case also ITC will not be allowed. Yes, but if capital goods used exclusively for taxable supply, yes, then ITC will be allowed. So what is a common credit then? Yes, common credit means total credit out of which non-business and affecting supplies if we minus and taxable supply will minus, then common credit of capital good will become. Common credit means that the credit which is used for each and every purposes. Okay, for example, if we buy an AC, we install an AC in office, that would be used for every purposes now. We cannot clearly define ki it is used for taxable supply, it is used for exempt supply. AC has been installed, we know ki it is that ITC will be used, that input tax which we have been paid, that has been used for both taxable supply and exempt supply if registered person is doing both. Okay, so this is the common credit. So here the thing is mentioned. So how to compute the capital goods common credit? So in that case, firstly we need to compute the common credit of capital goods. Okay, we compute that. After that, ITC on capital good whose residual life remaining in the beginning of tax period. In that, in this rule it is clearly mentioned that useful life of capital asset, every type of capital asset, is 60 months. Yeah, 5 years. 5 years, it means 60 months. So what are the common credit which we need to divide by number of months left, say 60. For example, if we buy an AC today and my company is making both taxable and exempt supply, so in that case, for example, if total ITC is 1800, then I will divide the total ITC by number of months left, that by 60. Okay, so ITC on capital good whose residual life remaining beginning of tax period, so that will be calculated by dividing number of months left. And we also read earlier aggregate value of tax supply, exempt supply, total turnover registered person, common credit attributable to exempt supply. In that case, E divided by exempt supply divided by total turnover multiply by in input and input service. In the case of input and input services, we take fully common credit of input and input services. But here, but in the case of capital goods, because capital good would be used for long-term purposes, in that it is clearly mentioned in the rule 43, there will be 5 years for the capital goods. So we have divided the tax amount of capital good by the number of month left. Okay, then we able to compute the common credit attributable to exempt supply of that month is D1. So net eligible credit would be C2 minus C1 minus D1, that is C3. Understood? This is all about the rule 43. And in the rule 43 it is also defined what is T1, T2, T3. We use these terms for ITC, and that ITC should be reflected in gesture 2, means gesture 2B. After that we are eligible to take ITC. Okay, so for example, if there is no turnover in case of capital goods, yeah, in case of ITC there is a no turnover, we have not made any turnover in that month, so we can consider the previous month turnover. Okay, the second condition is that condition, and whatever the value which we are consider for taxable supply, that would be the excluding taxes. Okay, that is also clear. Now it is pertinent to note that the useful life of capital goods shall be taken as 5 years. It is most important thing in the case of capital goods, which we need to remember. The useful life of capital goods which is mentioned in the rule 43 is 5 years. We need to ascertain, yes, it is very complicated process. For example, if we have buy many assets, 5-10 assets, which we need to ascertain how much month when we have purchased this asset. That's why after that we are able to compute number of month left. Okay, and the fifth condition is the registered person is expected to make such computation for each taxpayer and for the whole year as well. It means for regular taxpayer, in that case he needs to compute this common ITC of capital goods as per rule 43 every month, plus as well as in every year also. So this is all about rule 43. Manner, only one thing is different. What is the difference between input and input services and capital goods? Yes, capital good is used for long term purposes. That's why fourth condition is here. Useful life of capital goods shall be taken as 5 years. Okay. Further, in input and input services, if we have seen, we have assumed that input and input services is also being used for non-business purposes. That has been assumed. That would be the 5% of common credit. But in the case of capital good, that is not there. If you seen here, only we have compute common credit attributable to the exempt supply. Okay, so yes, it becomes again a very complicated. So we can make this easy with the help of an example, and it will be very clear. So see, exclusive taxable ITC 50,000. Yes, we can avail the ITC. Okay, so exclusive exempt ITC, yes, we have used capital good for the purpose of exclusively for the making supply of exclusively exempt ITC, that is ITC not be available. So I have marked red on which ITC is not allowed. Common credit, yes, common credit pay ITC would be applicable. Ineligible credit as per section 17 subsection 5, no. So on that amount ITC will not be allowed. Non-business credit ITC will not be allowed. Exclusively exempt ITC not allowed. So exempt turnover 10 lakhs at taxable turnover 30 lakhs at the compute ITC available as per rule 43. So let's see. So how we shall compute the ITC as per rule 43. So we know common credit 30,000, taxable, exclusive taxable at ITC, but means we have used capital goods which is used exclusively for making the taxable supply. So in that case, the full amount of ITC will be eligible. Okay, we can avail the full ITC. while filing the form GSTR 3B. So there is a, to most concern about common credit, to how we can compute the common credit. So 30,000. See, so in the case of capital goods, in the rule 43, the two things we need to take care. First, non-business purpose, that is nothing here in rule 43. Plus, common credit shall be divided into 5 years. Okay, so because it has been used for long term purposes, and how to apportion, that formula is same, 30,000 divided by 60 into exempt supply divided by total number of supply. How much credit is common credit of capital good is attributable to our exempt supply is 125, and to our non business 0 है. Exclusively taxable ITC 50,000 है, तो ITC as per rule 43 how much is 79,875. So out of 80,000, a registered person shall be eligible to take ITC as per rule 43 is amount to rupees 79,875. So with the help of, for example, it would be very easy to understand the things. So there is nothing here mentioned in the rule 42 and 43. If we read 2 and 3 times about rule 42 and 43, then it is clearly understood, and it is very helpful, and it is most important rule of 42 and 43. All of the workings of ITC depends on the rule 42 and 43. If you see in every week 4, every MNCs, okay, they are more concerned about rule 42 and 43. So everyone should have clear and cut knowledge about 42 and 43. If you have any doubt, let's make an example, okay, and then you have to compute. Okay, so it becomes very easy to understand the topic of rule 42 and 43. So what we have read the section 17 subsection 1, that is about the, if we that is about the business and non-business purposes. If we use goods and services for business and non-business purposes, then ITC shall be restricted to the business purposes. Then we have read section 17 subsection 2. If a registered person is making both taxable and exempt supply, then how much ITC he can avail? Yes, ITC shall be restricted to the input tax as it is attributable to the taxable supply. And we have also seen how to compute the common credit attributable to exempt supply, which will be disallowed, okay, as per the rule 42 and 43. So this is the most important sections. So today my total emphasis on this section 17 subsection 2. A layman easily understand what is section 16 1 2 3 4. There is a clarification, but the most important thing, how you compute the ITC, how you apportion the ITC. So that is the most important things you should know. And section 17 subsection 3 is just about the value, how you compute the value, and 4 about the banking company and financial issue. So government clear cut specify, everything is clearly mentioned in the rules or section how you can avail the ITC. Okay, if anything has been defaulted, then notice has been come by the concerned authority. To avoid litigations, okay, we need to rigorously follow this section and rules. So we'll take another example. Yes, we've taken another example about capital goods and input goods. Suppose a registered person has making taxable and exempt supply. Firstly, you need to learn, if a company making exempted and non exempted and taxable supply, then rule 42 and 43 would be applicable. And when rule 42 will be applicable, there is an input and input. Obviously, there would be an input and input services, and it is an obvious thing. Okay, he buys an capital goods also. So if a company making taxable and exempt supply both, then rule 42 and 43 will be applicable. See, so exclusively taxable ITC 20,000, 10,000, exempt ITC exclusively the wholly exempt ITC, that is not applicable. It means we use that ITC for the purpose of making exempt supplies. So in that case, ITC will not be allowed on that case also. Okay. So that is 8,000, 7,000. Common credit 25,000, 30,000. That is the main concern factor. All the calculation will be revolving around common credit. Ineligible credit, okay, nothing to be used. Non-business credit 4,000, 3,000, okay, there is no relevant. Exempt turnover, yes, it is relevant. Taxable turnover, yes, it is relevant. So compute ITC available as per rule 42 and 43. So let's see. I think it is very easy na. Common credit hai, we capital goods 25,000, input and input services 30,000. Okay. So in the case of capital goods, how we compute the common credit of capital good toward exempt supply? We need to divide by the life of number of month left, ठीक है, of the common credit, and then into it is multiplied by exempt supply divided by total turnover. It is 20 lakhs and 80 lakhs. Okay, 20 lakhs is our exempt turnover, taxable turnover 60 lakh, so then total turnover is 80 lakhs. Then in that case, common credit of capital good toward exempt supply is 104. And similarly, in the case of input and input services, common credit is 30,000. We need to divide by total turnover and multiply by exempt turnover. So in that case, so input services towards common credit of input services toward exempt supply is 7,500. Yes, and in rule 42 it is mentioned that key common credit attributable toward non-business would be 5% of common credit, but it is nothing mentioned in the rule 43. So in the column of input and input services, we also need to deduct the 1,500 amount from common credit, which is pertaining to non-businesses, which will be 5% of common credit, and the same shall not be used in the case of capital goods. Okay, exclusively taxable ITC, yes, that ITC would be available. Why that ITC would be available? Because we have used these capital goods and input services for making taxable supply, exclusively taxable supply. So in that case, ITC would be eligible. That would be 20,000 and 10,000. So ITC as per rule 42 and 43 would be 44,896 and 31,000. Okay, so you have seen what we have seen. We have credit of, for example, if someone has availed the credit 40,000 in the case of input and input services, obviously at the time of assessment there will be issues. You need to pay taxes, penalty, etc. So we need to compute the ITC very well. We have to take care of each and every section and rule what has been prescribed in the GST Act. Similarly, in case of capital goods, in case of capital goods there is a ITC of 45,000, out of which we are eligible to take ITC is 44,896. Okay, so we have computed this ITC as per the formula prescribed in the rule 42 and 43. Okay, and one thing which is to be noted in the case of manner of distribution of ITC in case of capital good is life of capital asset would be 5 years. That is the most important thing which we have to be note there. So this is all about the section 17. So section 17, so two rules which have some major role to compute, to apportion the ITC in between taxable and exempt supply. Rule 42, it's all about the inputs and input services. Rule 43 is all about the capital goods. The formula is prescribed and we have taken an example. So you have to be very take care and careful before computing the ITC as per rule 42 and 43. Every section, every things we need to comply before computing the ITC. So now the very important clarification on the requirement of reversal of ITC in respect of the portion of the premium of life insurance policy which is not included in the taxable value. If it is not included, it is there is a clarification. First of all, I want to share one thing. For example, in case of LIC, if we pay premium, there are two types of premium: risk premium and investment premium. In that case, what the LIC do, if we pay a premium So they invest some money in mutual fund. Okay, they will earn some money now. So it is clearly mentioned in the rule 32 subsection 4. The investment premium on investment premium, no GST would be applicable. Okay, no GST would be applicable. Only the GST would be applicable on the risk premium. Okay, rule 32.4, if you say na, it is clearly stipulated in the rule 34, gross premium charge and after removal of the investment premium. It is like that. It clearly, I'm not recalling the clear word, but what it is mentioned in the 32.4, but it is mentioned in the 32.4. Okay, and if we say, whatever interest and dividend which we are earn from mutual fund and dividend, it is not in the ambit of GST, which is not relevant. I'm just saying like that. So this is the most important clarification. What is the clarification? Clarification on the requirement of reversal of ITC. What we have reversed common credit in respect of the portion of the premium for life insurance policy which is not included. Obviously, if that ITC is not included, then there is no need of reversal. To see what are the clarification. So life insurance business includes policies or instruments that combine investment and insurance component. Okay, I told earlier, investment and insurance component. This covers unit linked insurance policy and similar products where both investment and life insurance risk coverage are provided by the insurance. Okay, so I told you there are two types category in LIC: risk premium and investment premium. The GST would be applicable only life insurance risk coverage, not on the investment policy. Further, exempt supply means nil related supply, wholly exempt supply under section 11 or section 6 of CGST Act, and includes non-taxable supplies. Exempt supply means non-taxable. Further, non-taxable supply means a supply not liable to tax under CGST Act or IGST Act. The premium portion is not includable in taxable value under rule 32.4. So in taxable value, that premium portion is not includable. It is clearly, therefore it is neither nil rated or nor wholly exempt from tax, and also not a non-taxable supply. Okay, so this is very important thing which we have mentioned here. The premium portion, investment premium portion, is not included in that taxable value because in which GST is not applicable as per rule 32 subsection 4. So therefore, if it is not included, then there is no nil rated, there is no question about wholly exempt from tax, there is no question of non-tax supply. So ITC reversal is required only for the supply used partially for business and partially for other purposes. ये तो section 1 में it is clearly simple mention that further ITC reversal is required when partially for taxable supplies including zero rated supply. Zero rated supply means export supply, and partially for exempt supply. But this premium portion, please listen carefully, but this premium portion is neither nil rated nor wholly exempt from tax, nor a not taxable supply. So it is not included in the taxable value. Okay, so what are the clarification to whether the ITC should be reversal in respect of the portion of the premium of life insurance policy which is not included in taxable value? So yes, the amount of the premium for taxable life insurance policy, the amount of the premium for taxable life insurance policy not included in taxable value, that is investment premium amount which is not included in the taxable value, cannot be considered as non-taxable exempt supply. So there is no question of reversal of ITC is required as per the provision of rule 42 and 43. Read with section 17(1) and 17 subsection 2 in respect of the said amount. Okay, understood clearly? So it is the most important clarification in respect of the investment premium on which no GST is applicable as per rule 32.4, and therefore there is no question about if it is not included in a taxable value, then there is no question of nil rated, wholly exempt and non-taxable supply. So that therefore there is no reversal of ITC is required as per provision of rule 42 and 43. So this is all about the clarification. So today we have read two important sections of ITC, that is section 16, which is all about eligibility, condition for availing ITC, capital goods, capital goods, and availment of ITC. And we have also read section 17. Section 17 is about the apportionment of credit when we are making supply partially for business and for other purposes. We have read the section 17 subsection 2. If we are making taxable supply and exempt supply, we have also read section 17.3 regarding computation of value of exempt supplies. Further, we have read section 17 subsection 4 about the option which can be opted by the banking company and NBFCs. And we have also read the rule 42 and 43, which is most important rule, ki how to compute how the ITC reversal amount, how to compute the eligible ITC. Further, we study two clarification. So today is all about of this. So thank you. So if you have any questions, please let me know.
So there are few questions on the chat box.
Mhm. Yes. Uh, Let
If
me
you had
open.
already gone through this, then it is okay.
Just a minute, I'm opening the chat book. Just a minute. I'm not able to see the any question. So good evening, Sima Karthik. So good afternoon. Suppose he, as per section 16 of section 3, suppose he booked the capital asset only for rupees 1000 and claimed depreciation and ITC. He is eligible. Yes, he is eligible for ITC because he has not taken the benefit in IT Act. Okay, so it is, I have told, for example, under RCM, if the recipient issue the invoice in 2029, is he eligible in the year with respect to? Yes, ITC, there is a clarification under section 16 subsection 4. So in the case of RCM, there will be next financial year would be the relevant for availing the ITC. Okay, is that we have to update bill raised under self invoicing in GSTR 1 or GSTR 3B. So I am not able to understand what he want to say. Is that we have to update bill raised under self invoicing. In the case of self invoicing, we need to disclose the detail in GSTR 3B in the outward supply and inward supply. Can we claim input on water bill used in office staff? The payment is not received. So we shall read in the section 17 of section 5, if the payment is not received from the government for the road work done by a contractor, if the payment is not received from the government for the, it is not paid to the subcontractor. Yes, there will be cases. So nil, zero rate supply means the supply which is on which 0% is 0% rate is applicable, which is in the case of export, and nil rated value means on which there is no tax is defined in the GST rate. Okay, so capital good cost is considered excluding GST, and depreciation on the same does not arise. Both ITC and depreciation not possible at all. Okay. Nice presentation. CK will nice presentation with good explanation. Thank you very much, sir. I think I have taken all of the queries. So thank you all. I think all the doubts has been clear. If still there is any doubt, please let me know.
Thank you, sir.
Thank you all. Thank you.
Thank you, sir, for engaging us with your expertise and knowledge. Thank you, all participants, for joining. Hope you found today's webinar valuable and informative. Thank you so much, sir.
Welcome and welcome. Thank you to all.
Priyanka, ma'am, am I audible?
The person you have called is speaking.